Hi everyone, I'm Emily, and today we're diving into one of the most exciting companies in the stock market, NVIDIA, ticker symbol NVDA. As of the last trading session, the stock closed at about $188.89, slightly up for the day. What's really impressive is its performance this year. The stock has surged nearly 140%, making it one of the strongest names in the S&P 500. But is this incredible momentum sustainable, or are we seeing a bubble forming? Let's take a closer look together. NVIDIA's financial results have been nothing short of extraordinary. In fiscal year 2024, the company reported $60.9 billion in revenue, which represents a 125% increase compared to the previous year. The biggest driver of this growth has been the data center segment, where revenues exploded by 200%, reaching $47.5 billion. That massive jump was fueled by overwhelming demand for AI-focused GPUs like the H100 and A100, which are now essential for companies building artificial intelligence models. Net income also skyrocketed to $29.8 billion, a jaw-dropping 586% increase from the year before. The company's profitability is equally impressive. NVIDIA's gross margin currently stands at 76%, which is extremely high for a semiconductor company. To put this into perspective, AMD's margin is about 47% and Intel's is around 42%. This shows that NVIDIA not only dominates the technology, but also has unmatched pricing power compared to its competitors. Now, in terms of valuation, NVIDIA is a giant. Its market cap sits at roughly $1.2 trillion. Earnings per share over the last 12 months came in at $11.93, which gives the stock a price-to-earnings ratio of about 44. That's almost double the average of the S&P 500. What this tells us is that investors are willing to pay a premium for NVIDIA, expecting that the company will continue to grow at an extraordinary pace in the AI era. Financially, the balance sheet is solid. The company holds about $26 billion in cash and has only around $11 billion in debt, leaving it in a strong net cash position. This gives NVIDIA plenty of flexibility to continue investing heavily in research and development, while also rewarding shareholders through buybacks. Of course, there are risks we need to consider. The first is valuation. With a PE of 44, the stock is priced for perfection, which means any slowdown in growth could hit the price hard. Then there's competition. AMD and Intel are trying to catch up with their own AI chips, and over time, new challenges may emerge. Another factor is geopolitics. NVIDIA relies heavily on TSMC in Taiwan for production, which exposes it to global political risks. And finally, the AI investment cycle itself. If spending in artificial intelligence slows down, so will NVIDIA's revenue growth. Looking to the future, Wall Street analysts currently have a 12-month price target for NVIDIA ranging between $210 and $230. And the company isn't slowing down. It plans to launch its next-generation Blackwell GPU architecture in 2025, which could fuel another wave of growth. In many ways, NVIDIA has transformed from a graphics card maker into the backbone of global artificial intelligence. So, here's my final take. NVIDIA has doubled its revenues in just 1 year. Its profit margins are higher than any of its rivals, and it holds a commanding lead in AI hardware. But the stock is expensive, and in the short term, we should expect volatility. If you believe in the long-term potential of artificial intelligence, NVIDIA could remain a core player in your portfolio. But if you're focused only on short-term moves, this stock may test your nerves. So, what do you think? Is NVIDIA truly the Microsoft of the AI era? Or is this just unsustainable hype? Let me know your thoughts in the comments. And if you enjoyed this analysis, don't forget to like this video, subscribe to the channel, and hit the notification bell so you don't miss my next update. Thanks for watching, and I'll see you in the next video.